Okay, I recording this video Saturday 9th of November 2013, and what an extraordinary couple of days on the Emini. It wasn't just the Emini, bonds, gold, silver, all the Forex contracts, just huge moves on Thursday and Friday. Large volumes, large ranges kind of going through. I traded Thursday, but Friday I thought would be quiet. I had no idea it would kind of do what it did, reverse all the way back up. It was actually my wife's birthday, so we took the day off and just kind of tooled around town and had a good time. But we had an equally kind of explosive move on the upside on the Emini on Friday as well. So I'm not going to talk about the multi-market stuff in this video. I'm not going to talk about gold and silver, currencies and bonds. Might leave that to another video tomorrow on Sunday. But I want to talk about a couple of emails I got from Sean and David over the last couple of days. You know, days like Thursday and Friday, there are traders who love it. They love the volatility and the big range moves and the large volumes kind of going through. And then there are traders that are really under pressure and kind of hate these kind of days. And the two emails I got from Sean and David kind of represent both sides of those coins. You know, one's doing well and enjoying this range and volatility, and one's having trouble. So both their questions are worth responding to. So I'll take some time during this video just to talk to those. But before I do that, just to say, you know, this is the 40,500 tip bar chart. What have we done over the last 2 or 3 days? You know, we've had this extraordinary move on the way down. I recorded a video after close of trade on the Wednesday, just talking about how the professionals use the aftermarket, the pre-open, to gap this market up through this range. We were stuck in this 50 to 60 type range, and then they kind of gapped it up on the Wednesday into those new highs, and then it kind of sold off during the day and had a really weak close. Well, what do you know, on the Thursday they did exactly the same thing. They used the pre-open to kind of gap it up above the 70s, get everybody freaked out, and the thing just reversed and went the other way. Just a huge downward move. And I said in that video, I wondered if we were going to see that exhaustion pattern, volume pattern on the way up. I'd love to have seen it, and what do you know, there you go. Kind of printed Wednesday into Thursday's trade. Wasn't a classic, didn't come with a Rambo pattern or a blue professional up bar or a pro signal exit, anything like that, but it was an exhaustion pattern nonetheless that kind of mirrored, you know, the exhaustion selling that we had that caught us back in the 50s, and so that's kind of gone the other way. And now Thursday into Friday's trade, we got the reverse. We've got an exhaustion selling signal on the way down. Blue professional bars have come in. They've kind of held it here with pro signal exit, reversed and gone the other way. And we're back up to where we started with another kind of exhaustion pattern about to print. So I'm not sure if we'll continue up through the 70s. We've got a little bit of time to run with trend moves on the 4,500 and so on that need to go to completion, you know, pull back to end of trend. And, you know, frankly, the blue professional bars have come in at the lows here, and we've held it down in the 40s down here and kind of raced back up. We're still in this kind of bubble phase, so, you know, if it continues to break up, you know, well, then we'll follow it up, follow those kind of trend moves till they get exhaustion on the upside. But you know, I don't know, it is an important level up here in the 70s, and we've had this, you know, real severe sign of weakness, but the professionals kind of came in. This one kind of midday was just taking short positions on that retrace. You can see as we started to sell off, we did not see blue professional bars catch these lows. They were kind of laying in wait with their resting sell orders as the market kind of just pushed back up for a little pushback, and then they took their positions on that retrace, and then bang, kind of fell off to new lows, and that's when they picked it up on the way down here. So let's wait and see, you know, Sunday night into Monday's trade to see where this goes. But, you know, if it continues to break up through the 70s because we've had these blue professional bars catch it down in the 40s, then so be it. I'll kind of, you know, go with the flow. So a couple of questions then from first of all Sean and then from David. So Sean says, hi Barry, great day. He's talking about Thursday's trade. Boy, when there's lots of volume, your indicators are simply amazing. Would love it if you'd address this in a future video of yours. I know you often say the professionals get short before peaks and long before bottoms. However, what I don't understand is how the price often accelerates as they're doing this. For example, as the price is reaching a peak, the price rises quickly during the blow-off move as the professional bars are coming in. It seems the professionals are able to push the market up and simultaneously getting short. Are these professionals actually buying and immediately selling at the same time that creates the acceleration effect? Would love it if you'd shed some light on this, just so I can understand this behavior in more detail. Thanks again for the indicators and videos, Sean. So let's go to a 1500 tip bar chart. to show this activity, and I'm going to refer to Wednesday's trade where we kind of had this blow-off activity into 1770, and you can see that exhaustion buying volume on better momentum. You can see the blue professional bars kind of coming at the highs, the pro signal exit that comes into resistance, and that's where the market kind of tops out and sells off. So I like to think about, simplify the market and think about professionals and amateurs, and sometimes I get pushback by email, people who are a little bit kind of angry at me, referring to, the dumb money as amateurs and the smart money as professionals. For me, it's just a way of simplifying the actors in the market, using average trade size to kind of talk about people who are on the whole winners as professionals and people who are on the whole losers as amateurs. I mean, you might be an amateur and love trading and so on, but what I'm trying to refer to is the type of activity that you see by the two different players. So it's not a disparaging kind of comment on the types of players and how successful they are. It's just based on trade size and representing, smaller players versus bigger players. So if you'll allow me to talk about amateurs and professionals, we'll kind of go through this move here. What we had on that Thursday was a congestion move. They'd gapped it up, as I said, above the 60s into this kind of mid-60 level, and then we had a congestion zone here. When we broke out of that move, I was long this trade, and the speed this accelerated was quite extraordinary. I was done this 4-point move in just over 5 minutes or so. As soon as it got going, it rapidly moved above here. Then the blue professional bars kind of come in. So I actually kind of disagree with Sean a little bit. He's almost saying that the professionals are causing this acceleration effect in the market, and in fact what I see is the acceleration is happening and then the blue professional bars kind of come in. So I see it in two ways. First of all, you've got amateurs, for example, who might be short into this move, and all of a sudden, when we break out of this channel, they're forced to cover, and so their stops kind of get triggered, and you get this kind of cascading effect. And it doesn't take much, out of that channel. You just need those stops. They're usually about a point and a half away from the top of that channel, and as soon as they start getting hit, it kind of creates this cascading effect where they start buying and buying because it's fairly lightly traded until the big volume comes in, where the professionals are in kind of waiting, lying in wait effectively with their sell orders kind of up here in the towards 1770. So the first acceleration that I see is stops being run, and its cascading effect as they kind of travel up through here, because there's actually quite light in terms of the resting orders. They're kind of waiting to take profits in reverse. So you've also got amateur activity where they're buying amateurs love buying and selling breakouts and breakdowns. They tend to be emotional in the way they trade, and so when they see the market kind of breaking to new highs, they'll jump on board and try and get into this move kind of going up. So that'll also kind of cause this kind of cascading effect to new highs. But the professionals are acting differently. They're far more savvy, willing to sit through some heat. They've got levels in their mind that they're willing to trade at and take positions at. So they've got, first of all, resting sell orders for their long trades. They could have been long at the end of close of trade during the day before. They could have been getting long during this congestion phase kind of here, and they've got a target in mind. So they've got resting profit targets sitting in this range up here, and as soon as price kind of gets into that, those large orders start going off. We start seeing blue professional bars kind of coming in. They've also decided that that's a good place to get short as well, so they've got resting sell orders kind of going in there. So as that volume kind of starts to really travel up, they've got those resting kind of sell orders going on. Now from time to time I get emails talking about, are the professionals smart enough these days where they kind of divide up their large orders into single lots and doubles, kind of with sell orders kind of going on there, and I'm sure there's a lot of that kind of goes on. But when you actually look at the numbers, when you look at the average trade size, they can't disguise all of their activity. And so you can actually see that the professionals are active during this range here, and they weren't during this kind of breakout range here. Interestingly, there's a little amateur bar. Happens to be a Rambo pattern, but again, that's amateurs kind of chasing a breakout that ends up being a false breakout as the professionals kind of stop it and reverse it and kind of goes the other way. So hopefully that kind of explains a little bit what I think is kind of going on here. This acceleration effect is effectively popping all of those stops as they kind of get taken out breakout on the way up, and that's being driven more by the amateurs than the professionals. And then at the end of this move, we got professionals kind of taking profits and got resting sell orders kind of going on. Now, as a contrast to that, I'm going to show you what was actually happening at the breakout on Friday's trade, where we get quite a different pattern, and you can see an actual breakout happening. Now, pre-Friday's trade, we had the low being made here down in the mid-30s, kind of high 30s down here, 1737, something like that. And then we had, the market kind of gradually kind of trended higher a little bit. But here's the breakout level at 1750, and you see a totally different kind of trade kind of going on. Through this breakout, first of all, we have one little blue professional bar here, and then a whole series of them, 1, 2, 3, 4, kind of going on here, buying that breakout. This was getting the move going. This is jumping the creek. This is professionals saying, okay, I might have been lucky and got in at the lows kind of down here. We see a couple of blue professional bars down in the high 30s and 40s kind of down here. But then they've decided, as this kind of level gets hit again at 1750, they came in once here and it comes back up again. They're saying, okay, this thing's going to go up and we're going to force it up. So they start buying in bulk up at 1750, forcing the market to go through this resistance point and breaking it into a trend move that really starts to travel by the end of the day. Now, the activity is different here. You can see at this breakout point here, which was previous resistance at 1750, the blue professional bars kind of come in, jump in the creek, and then get the move going. They're not active here or here, and in fact what we have is Rambo patterns up here. The amateurs kind of getting into this breakout way too late, and it kind of sells off after that. All of that profit taking starts to take place really at the highs up here, and then up here and into the close of the day. You start to see multiple blue professional bars kind of come in. So this is quite different as a pattern. This is a breakout pattern where the professionals are causing this breakout to happen, and are happy to buy all of that volume that comes to them as they're kind of wrapping up all of those trades sitting on the ask at that point. They're wrapping up all that volume and forcing the market kind of further up. So different pattern because the blue professional bars come in at the breakout point rather than after the breakouts traveled a little bit and the stops have been run and so on. So hopefully that kind of explains a little bit more of my kind of thinking on blue professional bars and this acceleration effect that Sean's asking about. Second question. Now this is David. David is having a hard time, and so he sent me a question after Thursday's trade. Hi Barry, I really bit it today. Can you advise me as to what I'm doing wrong? Am I missing something? Should I be looking at something before I make a trade? I seriously need to make this work. At 8:51 November 7th, so that's on Thursday, there was an exhaustion selling on the price bars, 15,000 contracts, 3 professional bars at the lows, and cyclical support, sine wave exactly crossing. All 3 of your indicators giving buy signals at the same time. I went long, the market kept going lower the whole day while buy signals kept on appearing. Help, David. Okay, David, let's go through that trade on Thursday, and I'll just line up my chart so you can see what I was looking at as well. Okay, so here's the 1500 tip bar chart. Here's kind of 8:51, around the time that David is talking about buy signals kind of going off. Now, the only signals that are actually happening at about 8:51 are an exhaustion pattern, blue professional bars kind of coming in and support going off. That is not a buy signal. Buy signals using the better indicators, we have to see a whole bunch of things kind of going off. We need to see confirmation that a support level is being made and that the move is starting to break to the upside. We see no confirmation that a buy signal is going off here. So the exhaustion selling at this point, yes, it was pretty extreme. Agree with that, about 15,000 on the way down. That at that point we don't know whether that is ending the bottom of this move or is actually the beginning of a trend move that goes a lot further, where that exhaustion selling gets picked up at the end of the move kind of down here with another exhaustion pattern down there. So at that point we're not actually sure whether this is selling, expecting a continuation, or picking it up. If that were really picking it up, what we would start to see is around this 1666 level, we'd start to see price bounce and this support level to really hold. The first thing we see is that it breaks through the support level, so that shows inherently there's weakness. Kind of comes back up. We don't have any testing down bars. There are no blue professional bars kind of heading down. This one was heading up, so there's nothing kind of coming down, testing into that level, testing with the amateur bars, amateur blue bars, or amateur yellow bars, kind of testing down into these lows and making sure that 1660 is actually a support level that's going to hold. The first thing that we see is the first bullish divergence kind of comes in here. Now this one is extremely close to the zero line, and I say when that happens, wait for the flush pattern or something more serious in terms of selling. That's not quite enough to stop the market. It shows that the market's found a little bit of support, that there's less selling going on, but particularly when it's close to the zero line like that, you need to look for something like a flush pattern later. Now as soon as we get the flush pattern, we've collapsed. This thing's gone forward. If that market had just hung around the 1766 level, traded up, traded down, we'd had a flush pattern coming around that level and so on, and then kind of tested and started to take off the upside, that would be far more like a buy signal. But at this point here, that is not a buy signal by any means. Now, I also need to make a clarification. When I talk about pullback to end of trend signals aren't buy signals either as well. All an end of trend signal is telling you is that's the end of a trending move. So this move broke down at this point here, continued down, and it ended at that point. And after we get an end of trend signal go off, that does not mean that we're going to start moving to the upside. All it means is that we're probably going to go through a congestion phase until we break into the next trend move. So that's what we do. We end it there. We get quite a strong rally from that point on, go through some congestion until we start breaking down into the next trend move here, pull back to end of trend. And again, from here, what we get, got a strong kind of bounce back, short covering rally going on there, but moves into congestion a little bit. All that is telling me is that's the end of this trending move. So again, end of trend signals are not buy signals or sell signals on the way up. They're just showing you that that trend move has temporarily kind of run out of steam and will go through some congestion. Personally, I can't really hold to the end of trends on the 1500 tip bar chart. I tend to be out early on kind of these rushes on the way down on left shoulders. I hate sitting through this move from the left shoulder to the pullback. I'm always kind of jumping out of trades, not willing to sit through that retrace until we hit the pullback level and go pullback to end of trend. So good for you if you can hold to the pullback to end of trend, because it will pull you out a couple more extra points. But for me, the risk return is just not there, and I find it much better to be out on the way down into this move rather than kind of squeezing out the extra points there. But that's just a personal preference and a kind of psychological, just something I just can't do. So buy signal, that's not what we've got there at 1500 tip bar chart. Let's also look at the other time frames to show you what's kind of going on at that point in time. So the 4500 tip bar chart, yes, we've got blue professional down bars kind of here, but this one is falling through cyclical support on the 4500 tip bar chart. That's falling through the ice. So even at kind of 851 kind of here, we're falling through support. We've gone past this support level at 4500 tip bar chart. That is not a good sign. If this were really support kind of going on, we'd have held at one of these time frames. We might have overshot 1500 a little bit, but we would have been caught by the next time frame up on 4500. That's not what happened. We rolled through 4500 as well. So this is showing there's real weakness in this market. So that is falling through the ice, blue professional bar through a support level. And this thing travels. We go pull back to end of trend. There's our exhaustion patterns on the left shoulder here, and we go to pull back to end of trend move. Now, another point about pullback to end of trend, could we have got a reversal at this point? We had a bullish divergence and a flush pattern at that end of trend, but we've gone past the window for a potential reversal kind of going on down here. This has gone to, we're looking at 1247 when this end of trend kind of goes off. I always say that if we're going to have a reversal day, we're going to have it by 11 in the morning. We'll have got our reversals in and we've started moving to the upside by 11. So this is well after 11 in the morning, pullback to end of trend goes off. And so the likelihood in most days, there are exceptions where, we can get reversal days on FOMC days or days where there are kind of news events that kind of come out in the afternoon. But most days, if we've not seen the reversal by 11 in the morning, all we're going to do is we're just going to continue in the same direction as we've seen the trend during the day. The trend was down during this day by after midday. The pullback to end of trend has gone, and the most likely trade was that we were just going to settle kind of making smaller and smaller moves to the downside, and that's effectively what happened. We traveled a little bit further, but it wasn't a big move, and the end of the big move during the day had happened during this kind of morning move. But we didn't get a reversal. We'd missed our window for a reversal here. So the point on the 4,500 tip bar chart at 8:51 was we'd broken support here, so we were probably going to run pullback to end of trend on 4,500. And then let's talk about the 500 tip bar chart here. So 8:51, again, agreed we'd had exhaustion selling, blue professional bars kind of coming at a left shoulder here. But on the 500 tip bar chart, we still had to run pullback to end of trend. So we knew that that wasn't kind of had not happened by 8:51. So we had to sit through that anyway. And you can see we keep on pushing down and down. The bullish divergence on this chart comes in again very close to the zero line. So you're looking for a bigger dip down, something like this. And as soon as we're breaking to new lows like this, blue professional bars starting to come in, but you've got to wait. You can't jump into a reversal trade. There's plenty of time. If the market is really reversing, and I know this is the hardest thing to do, it's taken me years to get this right, is just to sit on your hands. If you're tempted to take a reversal trade, just wait and wait and wait and then wait some more, because the market will always kind of test down, and it'll tell you if it's going to reverse at this point here. This support level would have held. We'd have then made a higher low at some point here, and then we'd have started to break up through resistance points, tested down, and then taken off to the upside. You've got plenty of time on a reversal trade to get into that trade. Do not jump into a reversal trade early. It's the worst thing. I'm a victim of it myself, but the more I can sit on my hands and do nothing, particularly if I'm trying to trade a reversal trade, those are the most dangerous ones. Going with the flow, no problem. And you can even enter late. You could enter at an extreme here, kind of going short at this point. If you've got a 4-point stop, you'll be covered through any retraces. Retraces generally on the E-mini don't go as much as 4 points, even if you get in on an extreme here. Let me just have a look and see what this is. The low of this was 65, and the high up here was 67.5. So even a bad entry at an extreme point like this with a 4-point stop, you're not going to be taken out. So that's my advice. Is there was actually no buy signals kind of going on here. All we'd seen was an exhaustion selling signal here, showing the strength of the selling, taking us through these to new lows. We were breaking through the 4,500 tip bar chart support, moving into a trend move on this higher time frame, and we'd not played out on the lower time frames in terms of this kind of move ending. So at 8:51, there's nothing like a buy signal kind of going on here. So hopefully, David, that kind of helps you a little bit in terms of what's going on. Be very careful, be slow to take a reversal trade. Trend trades, kind of jump on board a little bit quicker. If you've got a decent sized stop, kind of playing on trend moves, they're safer to make. But take your time on a reversal trade. And on what I was seeing on that chart at 8:51, there's nothing like enough kind of signals to say that this thing is reversing and likely to go the other way. So hopefully that helps, not only kind of David and Sean, but anybody else kind of out there listening who are using the better indicators. As I said, I might do a video on Sunday just talking about the other markets, because particularly bonds, gold and silver are doing interesting things. I'm less sure as what's going on in the currencies, but we've certainly kind of got big volatility kind of going on. So I'll do that on Sunday, and hope your trading is going well.